Good evening, and welcome to our Market Watch. Let's start with yesterday's U.S. market performance. The Nasdaq Composite fell 0.57% to close at 25,690.90. The S&P 500 edged down 0.14% to 7,498.96, while the Dow Jones Industrial Average was essentially flat. Pre-market futures are continuing to weaken, with Nasdaq futures down 0.4%. The VIX, often called the fear gauge, dropped 2.4% to close at 16.64, indicating some easing in market anxiety. The 10-year Treasury yield rose slightly to 4.66%, up 0.63%. The dollar index was nearly unchanged at 101.14. The Chinese yuan remained stable, with USD/CNH at 6.7727, down just 0.03%. In cryptocurrencies, Bitcoin slipped 0.39% to 66,044, while Ethereum gained 0.91% to 1,938. In commodities, WTI crude oil surged nearly 3% to $87.92 a barrel, driven by inventory data and supply-side events. Spot gold edged down 0.14% to $4,126.80. Now, the biggest story yesterday was structural divergence. The major indices were weak, but money didn't leave the market. Instead, it concentrated heavily in the AI hardware supply chain. Advanced packaging, optical modules, and compound semiconductors all saw strong gains, essentially moving independently from the broader market. On the other hand, China's Chi-Next board, the tech-heavy index, plunged 3.23%, and heavily shorted tech stocks also performed poorly. This created a classic pattern of weak indices but strong sectors. Let's walk through the global trading session. In Asia, China's main board was relatively resilient, with the Shanghai 50 index actually rising 0.58%. But the Chi-Next board's sharp decline confirmed a clear rotation of funds into blue chips and energy stocks. In the U.S., the market opened weak and traded in a narrow range. However, AI hardware names like AEHR, AXTI, and AAOI rallied strongly, completely independent of the broader market. Nvidia also gained 2.77%. This tells us that the upstream AI industry is shifting from a follower to a leader, and that's a signal we should watch closely. What was the biggest surprise today? We underestimated the explosive power of the AI hardware supply chain. AEHR's earnings report, AXTI's order confirmation, and AAOI's industry logic all resonated at the same time, forming a very clear main theme. The market essentially ignored the Chi-Next board's continuous decline and the high short interest in some individual stocks. All the money was focused on this mainstream logic. Looking at the three key indicators, the dollar index and the yuan exchange rate were both stable, suggesting that the decline in Chinese stocks was not driven by a systemic outflow of foreign capital. The strength of the U.S. AI hardware sector could potentially spill over to similar names in China through the industry chain logic. The slight rise in the 10-year Treasury yield put some pressure on growth stock valuations, but the market chose to ignore it and continued to bet on the high growth of AI hardware. This shows extremely high risk appetite in this area. So, what are the main capital flows and sector themes? The strongest direction is clearly the AI hardware supply chain, including equipment, materials, and testing. We put the probability at around 80%. The second strongest is energy, as the surge in oil prices directly drives oil company stocks. The weakest direction is heavily shorted small-cap tech stocks and China's Chi-Next board. Market risk appetite is concentrated on mainstream institutional logic, and these small caps lack strong catalysts. Let me give you a few verifiable predictions. AEHR may see a pullback or high-level consolidation after its sharp rally, as profit-taking pressure builds. SoftBank Group presents a time-lag arbitrage opportunity, as ARM's 22% surge is not fully reflected in SoftBank's stock price. Saudi Aramco, as a oil sector leader, will benefit from rising oil prices. The Chi-Next board may continue to weaken, with funds rotating into blue chips and AI hardware. The 10-year Treasury yield is expected to trade in a range between 4.60 and 4.7%, as the market waits for U.S. GDP data. To sum up, the market is in a consolidation phase, but money is highly focused on two main themes: AI hardware and energy. The strategy should be to control positions and lean long, keeping a close eye on the sustainability of the AI hardware theme and the stability of crude oil prices. As long as the AI hardware sector doesn't see a dramatic open high and close low pattern, and crude oil stays above $87, this direction is worth following. But if we see a collective sell-off in AI hardware or a sharp drop in oil prices, it's time to adjust positions. That's all for today's market analysis. Thank you for watching.